In our previous lecture, we learned what an organization is, its different types, and the various types of businesses. We also discussed the activities performed by each type of business. Also simple profit calculation. From this lecture onward, most of our discussions will be based on the trading business unless I specifically mention another type of business. Therefore, whenever I use the term business in the upcoming lectures, it should be understood as a trading business unless stated otherwise. In this video, we will learn about trading business and the heads of accounting. Before you continue, I highly recommend watching the previous lecture, as it will make it easier for you to understand the topics covered in this video. So, let's get started.
As we know, the main activity of a trading business is to purchase goods and then sell them at a higher price by adding the desired profit. To start and operate a business, two key individuals are required. The first is the owner, who invests money in the business and is also known as the investor. The second is the manager, who is responsible for managing the business and maintaining its records. In today's business environment, this role is often performed by a chartered accountant or an accounting professional. Just as the human body consists of different parts that work together, a business also has different parts that perform specific functions. In reality, it is not the business itself that operates. Rather, it is the different parts of the business that perform the activities required to run and manage it. Just as a human body cannot function properly without its organs and body parts, a business cannot operate, grow, or maintain its records without its essential components. The different parts of a business are known as accounting heads or the chart of accounts. You can think of an accounting head as a large gift box. As you open that box, you find another box inside it, and then another one, each with its own name and purpose. Every box represents a specific area of the business and is responsible for recording important business activities and transactions. In simple words, the chart of accounts is one large category that contains 10 smaller accounting heads, and each accounting head is used to record a particular type of business information. Now, let's open those 10 boxes and identify them according to the activities they record. These accounting heads are capital, drawings, assets, liabilities, purchases, purchase returns, sales, sales returns, expenses, other income. Each of these accounting heads is responsible for recording a specific type of business transaction. Together, they help us organize and maintain the financial records of a business in a systematic way. Before moving forward, please keep the following points in mind. Always think according to the business. Always speak according to the business. Always write according to the business. Always view every transaction from the business's perspective. These principles will help you understand accounting concepts more accurately and professionally. Now, let's move forward and study these accounting heads in detail. Capital. Capital is the amount invested by the business owner in the business. Drawings. If the owner withdraws some money for personal use, it is known as drawings. Assets. An asset is a resource owned by the business that will provide benefits to the business in the future. Liabilities. A liability is an obligation of the business that the business has to pay to someone in the future. Purchases. When a business purchases goods from a supplier for resale purposes, the buying of these goods is known as purchases. Purchase return. When a business returns goods to the supplier due to any reason, it is known as purchase return. Sales. When a business gives goods to a customer for a price, it is known as sales. Sales return. When a business receives goods back from a customer due to any reason, it is known as sales return. Expense. Spending by the business on running its daily operations is known as an expense. Other income. If a business receives some benefit other than its main business activity, it is known as other income. These are the 10 heads of accounts on which all accounting transactions are recorded and all accounting adjustments are made. In today's world, these accounting heads are summarized into 5 major categories: equity, liabilities, assets, revenue, and expenses. Now let's see how these 10 accounting heads are summarized into 5 major accounting heads. Equity includes capital and drawings. Assets remain under the assets category. Liabilities remain under the liabilities category. Revenue includes sales, sales returns, and other income. Expenses include expenses, purchases, and purchase returns. In this way, the 10 accounting heads are summarized into 5 major categories: equity, assets, liabilities, revenue, and expenses. In today's lecture, we learned about trading business, the concept of the chart of accounts, the 10 accounting heads, and how they are summarized into 5 major accounting heads. Before the next lecture, try to identify which accounting head is used for cash, furniture, rent, sales, and owner investment. I hope that everything discussed in this video was easy to understand, and after watching this lesson, you will be able to identify the purpose of each accounting head on your own. That's all from my side. I hope you enjoyed this video. Please don't forget to like, share, and subscribe to this channel. Also, make sure to press the bell icon so that you never miss any future updates. Thank you for watching, and I'll see you in the next lecture.